Welcome back for another edition of London Direct. The German politicians have kept us waiting for a couple of months, but finally we have a grand coalition, and I'm now joined by Adrien, and we're going to discuss all things Germany. Adrien, we've been waiting for this coalition for 2 months, but does it change anything for the whole of the Eurozone?
I'm not going to think it's going to change anything regarding the Euro position in terms of the monetary policy. The main change basically was just for Germany itself. I think the main point of this coalition is basically the increase of the minimum wage, which is now €8.50. This is supposed to basically boost the buying power of the German. The interesting thing is that all this measure is supposed to be done is 23 billion, and it's supposed to be done without a tax increase. So we have here two different positions. The increase of the buying power of the German made by the increase of the salary wage, but then they will have to find the money to pay this increase of the minimum wage. So where they're going to have to find the money, I think, is basically the main deal of the future. Anyway, it's not going to change anything for the whole Europe. It's just focus on Germany.
Yeah. Well, what about Germany's position in terms of the ESFF, the ESM, and the negative interest rates? Does it change anything there? Because Mario Draghi is coming under more and more pressure to do something radical to help out the periphery of Europe.
Honestly, I'm not thinking it's going to change anything. It's still Merkel, which is going to be elected normally. It still needs to be voted, but normally on the 17th of December. So I think it's not going to change for the past 6 years. So Germany is still going to feed the whole Europe. And for the ECB, basically, I think the main point of focus is still Italy, Spain, and Greece, basically.
And just to finish off, this $8.50 minimum wage, isn't it bad news for Germany, because Germany has been so dependent on exports? And surely, that feeds into the manufacturing picture.
This is the reason why I think it's kind of tricky. Actually, they have to find a way. It's done without any tax increase, so it's supposed to help as well. I think the Eurozone has put a lot of pressure actually onto Germany, because the fact that before that the minimum wage of Germany was quite low, it was almost against France and all the partners of the Eurozone. So now it's a bit more equal. So we have to find a way that does the German economy will be affected, like they have now to pay more the employee.
Okay, we're going to change direction slightly now and talk about the Royal Mail. Ishaq has been lots in the press about the Royal Mail over the last day or so. Vince Cable's come under pressure, saying that he undervalued the company when he pushed it forward for its IPO.
Yep.
What's your view on the matter? And what do the clients of ETX Capital think? I know you guys had a grey market for everyone else.
We did indeed. I think our clients and us, we are in line with our views that the government did vastly undervalue this IPO. They engineered it in a way to do so, to get as much demand as they could, and that was obviously quite popular, given the fact that the shares are now up 5% since their debut on the stock exchange, now around about £5.60p versus the top range price of £3.30. Undervalued in the sense that engineered by the government in order to get this right before the elections in 2015. Very smart move, but of course there's a backlash now in the sense that it's been undervalued to the point where now people are questioning what the government's agenda and the motive was behind this. And I personally feel that the UK government, the way they placed this IPO was to really get that foreign investor demand, so they can smoothly, when it comes to selling off their stake in Lloyds Banking Group and RBS, they can do it without a hitch and get all of that international support from the likes of many countries in the Middle East, such as sovereign wealth funds in Qatar, and also some of the Asian investors as well. So engineered in a way to get that demand, but not morally right by the UK government. I think that's going to be the big question. They're going to be under fire with that.
Yeah, but you say that it's not morally right, but surely it would have been in the government's benefit to value it at a pound higher. So I don't necessarily buy this argument that they just want to play on it safe, because surely George Osborne is after all the money he can get.
Yeah, absolutely. But by valuing it a pound higher, then you would could say that it would have impeded the amount of demand that it actually got. It was oversubscribed. The mix was heavily towards the institutional clients, but this time around, retail investors got a chance to get a piece of the pie. A lot of retail investors actually got out of the position as soon as they could, just to make a profit on it. So I think they were trying to keep it as low as they can in order to get that sort of demand. They could have raised it by a pound. It probably wouldn't have done anything too critical to really damage the sort of debut that it had. But I think the way that this was done was a lot of hype by the UK government, hype by the media, and also the management at Royal Mail to quell a lot of the investors' worries that this company has a strong growth profile. And it certainly does. Today's numbers, their maiden numbers, does suggest that there's a lot of prospects for Royal Mail to grow in the right direction.
Yeah, just to finish off and to look at the FTSE generally, every time I come to speak to guys like you here or anywhere else in the city, they're all bullish, saying, oh, the FTSE's going to push higher. But it still hasn't come close to that 7,000 mark, let alone breaching 6,800.
Yep.
So why is that?
Yeah, it's waning, and it's a bit of an isolated case with the FTSE. I was looking at the figures today. It's the underperformer versus its peers in Europe, down about 0.4% for the week, whereas you got the DAX up about 1.4%, and the CAC up about 0.4%. The interesting thing is that they're seeing a bit of a decoupling from the Dow in the US, and the FTSE tracks the US markets quite heavily versus the European pairs. I think one of the big reasons what's been capping the FTSE's advance is the concern or the fear that we may be in for a rate cut a lot sooner than expected by the Bank of England, possibly as early as mid-2000 and late 2014, or even as early as the start of 2015. That's been tempering some of the fuel or the drive to buy the FTSE at this point around, and at the same time, the FTSE, given the fact that it is a heavy commodity mix index weighted towards the commodity sector mostly, the fact that we are seeing this turbulence in commodity prices across the board, fluctuations in gold prices and also for silver and other precious metals, it's been hitting a lot of the commodity-based companies, the likes of BHP and Antofagasta. In fact, Antofagasta has been one of the worst performers this week so far, and that's been putting a lot of pressure on the FTSE itself. So it's been difficult for the FTSE to really get out of this range that it's in.